Thank you, everyone, for joining us today. Yesterday, the Employment Department released the jobs numbers and the unemployment rate for Oregon in May. Total non-farm payrolls rose by 6,900 jobs, and the unemployment rate was unchanged at 5.9%. In the first 5 months of 2021, Oregon employers added 52,500 jobs. By comparison, it took our state about 20 months to add that many jobs before the pandemic. While hiring's been strong in recent months, it hasn't been evenly distributed across the economy. Private education services added 3,400 jobs in May, the most of any sector. Professional and business services, which is a mix of architectural and engineering services, corporate offices, and temp help services, among others, they added about 2,900 jobs over the month. All other major sectors of Oregon's economy were closer to their seasonal hiring patterns, and that includes leisure and hospitality. It added 4,200 jobs over the month, but that's exactly the type of growth we would expect from them this time of year. So on a seasonally adjusted basis, there's no net gain. And even though May represented a slowdown, the leisure and hospitality sector has still managed to pack nearly 5 years of pre-pandemic hiring into the first 5 months of 2021. From January to May, the sector added 27,000 jobs. Prior to the pandemic, it took 58 months for leisure and hospitality to net a gain of 27,000 jobs. The leisure and hospitality sector is generally keeping up with Oregon's overall recovery, adding back 58% of the jobs that were lost in spring 2020, compared with 62% of overall jobs. As we move into more fully reopening the economy, the dynamic has really shifted for employers who are hiring workers. In the first quarter of 2021, the average starting wage for jobs in Oregon was $19 an hour. Between 2020 and the first quarter of 2021, the average starting wage in retail trade rose by about $2 an hour to $17. Employers in transportation, warehousing, and utilities also increased average starting wages to $20 in the first quarter of 2021. By comparison, the average starting wage in leisure and hospitality was unchanged at about $13. And I point out these three sectors because we know there's a tendency for workers to flow from jobs at hotels, bars, and restaurants to jobs in retail trade and in transportation, warehousing, and utilities. So in addition to the labor market barriers we've been talking about recently, holding some people back from the labor force, these leisure and hospitality employers have also been competing quite a bit amongst themselves in recent months, and they're facing the additional headwinds of these other sectors who are offering higher average starting wages. Now, we're also seeing dramatic shifts in unemployment, particularly among teen workers. Now, we don't get monthly data for this at the state level, but nationally, the unemployment rate for workers ages 16 to 19 was 9.6% in May. And that's the lowest it's been since at least 1976. Now, there are reasons the unemployment rate can go down that aren't so great, such as massive amounts of teens leaving the labor force, but that's not what's happening here. The number of teens in the labor force is above its pre-pandemic level, and the number of teens who are employed has risen by about 142,000 nationwide, above its pre-pandemic level. So, as we saw heading into the recession, we see now during the recovery that there are different impacts across different sectors and different worker demographics in Oregon. And now I'll hand it over to our acting director, David Gerstenfeld. Thank you.
Thank you, Gail. There is a lot of nuance going on with our recovering economy. It's certainly not a one-size-fits-all situation, and you've done a really good job of explaining some of the main factors in that. And we know how important it is that there's reliable access to statewide and local workforce economic information. Our dedicated website, qualityinfo.org, that has nationally recognized information of this nature, was inaccessible for some time on Monday. We were immediately in contact with our vendor, and qualityinfo.org was fully accessible by Tuesday. We've committed to being transparent when things do not go well, and this is one of those situations. We're very sorry for the inconvenience, and we've taken steps to stop things like this from happening again. I'd like to give an update on the return to work activities that we're doing and that we're helping so many workers in Oregon do. This Saturday, June 19th, is the deadline for the first 38,000 people who received letters from us to register in the state's job match system, iMatch Skills. If those people don't complete their registration by June 19th, their benefits will stop. Of the 38,000 people who have received that June 19th deadline, about 8,000 have already completed the iMatch Skills registration. And as a reminder, we're sending letters to everybody who received benefits at any point in 2021 because we don't want anybody to miss out on this information. We do not expect everybody that we sent the notice to sign up and register on iMatch Skills, because the good news is that a lot of those people have already returned to work, so are no longer claiming benefits. For people that are claiming benefits, we've sent several letters reminding them of the deadline, and we're emailing people who have given us their email address later this week also. If somebody misses the June 19th deadline, we encourage them to quickly complete their iMatch Skills registration so they can receive the benefits that they're eligible for. And whether somebody has that June 19th deadline or not, people that are able to work should be out there looking for jobs now. There's a lot of employment opportunities. People receiving regular UI benefits and people on PUA who are looking to work with an employer will not receive benefits starting the last week of July if they're not actively looking for work and tracking what their work search efforts are. People receiving PUA who are self-employed will be required to maintain records showing that they're working on their business. Through August of this year, if there are barriers that keep people from being able to accept full-time work, then seeking part-time work is appropriate during this phase-in period of the more typical unemployment eligibility requirements. Starting September 5th, all the pre-pandemic benefit requirements will be back to normal. That means people must be able to work, they must be available for work, and they must be actively seeking work and willing to accept full-time, part-time, and temporary work opportunities. Our WorkSource Oregon partners and employees are helping people find jobs over the phone, online, and using our drive-through job fairs. Beginning July 6th, our WorkSource offices will be open on an appointment basis to help people find jobs. People seeking assistance with their benefits should continue to use the Contact Us form on our website or to call the Unemployment Insurance or PUA contact centers. We know many people have not received unemployment insurance benefits before and may have questions about these requirements. We encourage people to visit our Return to Work page and the FAQs at unemployment.oregon.gov/return to work. We also recently held a Return to Work webinar on this topic, and that can be viewed by clicking the link at unemployment.oregon.gov/webinars. As I've mentioned previously, we take the protection of our unemployment insurance trust fund very seriously. And today we're introducing another tool in our fraud prevention efforts. People who are filing for PUA or MEUC, the Mixed Earners Unemployment Compensation Benefits, will have a CAPTCHA tool that they need to complete when they are filing for their benefits. In terms of the benefits that we've paid out, since March of 2020, we've paid about $9.6 billion in benefits to more than 635,000 people. That represents 14.4 million weeks of benefits being paid. Last week in all, we paid about $113 million to 143,000 people. I do want to point out that we measure and publicly report out on many different aspects of the benefits we administer, and these numbers about people that we paid last week and the dollar amounts paid represents the amounts that were actually paid out to people last week. In closing, we are working very hard to meet the needs of people that are receiving benefits and trying to find work, and to help businesses find the workers they need. We have employment resources for job seekers, and we're committed to doing whatever we can to help people rejoin the Oregon workforce. And with that, I'm happy to answer any questions people have.
Thank you, David. Now we are opening the lines to members of the media to ask questions. We will call on you in the order you RSVP'd. And a reminder, if you are joining us by phone, be sure to hit *6 to unmute yourself. If you don't get your question answered, please email oed_communications@oregon.gov. When asking a question, please let us know which panelist you would like to respond to your question. So the first one up is Bill Poehler with the Statesman Journal.
Yeah, hey, so this question is for Gail. Kind of curious, when we look back at the early parts of the pandemic, if you can tell us, or if it's been determined which level you were talking about, salaries of workers, if it's been determined which levels of salaries were people who were initially laid off, and how that went through the first few months of the pandemic. I haven't been able to figure that part out myself, so I'm wondering if somebody else has figured that out.
One of the things that we saw during the initial layoffs in the pandemic recession is that we took a look at the number of what we call stable workers, so workers who were not just popping in and out of the labor force, but were employed prior to the onset of the pandemic recession in Oregon. And if we take a look at who lost jobs, those who were in the bottom, roughly 1/3 of workers earning less than 17.44 an hour, they lost the most jobs. Now that would have been true of those who lost jobs in the year prior as well, but it was much more pronounced in 2020, and it was across all sectors of the economy. So we know that coming in, or in the onset of the pandemic recession, those who were earning the least in Oregon lost their jobs to the greatest degree.
That's interesting. So, do you know, like, is it, can you give me in like broad strokes, like how that, let's say that group got, were reemployed, and like, were they, was it slow for the lower paid people to get their jobs back, or was it quicker, or what do you think?
I've only been able to look at the initial job losses and what happened there. We need to have several months of the records, again, to get that stable cohort, and the records that are used to do this type of analysis are on a 6-month lag. So I don't have the full picture yet of what's happened in terms of recovery, but I do know what happened in terms of the initial losses.
Okay, great. Thanks, Gail.
Thank you. Next up is Lindsay Nadwich with Coin. Lindsay Nadwich with Coin. Okay, we'll come back. Peter Wong with Pamplin Media.
Hi. First question today for Gail. You mentioned the rate of job growth in the first 5 months. I think you noted that the last couple of months weren't quite as robust as the first three. Can we see any pattern as we get into the summer as to whether that pace is going to pick up? I assume in leisure and hospitality it will, but anyway, that's a question. What kind of pace can we expect in the next month or two?
I think it's a great question, and it's really hard to tell because things have been so inconsistent from one month to the next in terms of growth. We've seen these tremendous swings coming right back into the first reopening last May and June, where we were adding as much as 30 or 50,000 jobs in a month, and then slow down over the last summer and fall, a big loss in December, and then this resurgence again. It's really inconsistent over months, and I think that it's hard to tell what it's going to look like going into summer. I certainly hope we see a continued acceleration in employment growth.
Okay, thanks. My question for David is, we're getting toward the end of the legislative session. I think your budget has passed the House, as in the Senate. The delaying of paid family medical leave was before the Senate Rules Committee. Was it yesterday or the day before? And I guess it's scheduled to come out at some point. I don't know if there's any amendments. And then there's the tax, House Bill 3389, I believe it is, that's pending. I think that's also in the Senate. Is there anything else aside from maybe technical bills that needs to pass for your department? And also on the budget, I've read the report, but I can't tell if it fulfills everything you think you need to do to carry out the agency's duties for the next 2 years.
Sure. And on the paid family medical leave insurance division timing bill of aligning that so that we can roll that out in the best way possible, that was in the Senate Rules Committee this week. There's not an amendment. That's certainly one that we need to make sure that we can implement that in a way so the program is successful from day one. The budget bill obviously is another one that we need, and To answer your question about whether that provides what we think we need, it does. The governor supported our budget, helped us work with the legislature, and the legislature was very much wanting to know what we think we need to serve the public best going forward. And that's what's represented in this budget. That includes the modernization efforts and the paid family medical leave insurance program continuing to be developed and then starting to implement that. And then the other major bill that we're watching is that unemployment insurance tax relief bill for employers, House Bill 3389, which is progressing. And those are the major ones that need further legislative action that we're still watching.
Okay, thanks. I think all are awaiting some kind of action in the Senate. Thank you.
Next up is Dick Hughes with the Hughesisms.
Thank you very much. David, you mentioned the quality info job site problem on Monday. And I've been on the site this morning, and we're just breaking news about the unemployment rate, and click here, I click there, and it doesn't allow me to reach anything. I keep getting the message that site not found. So are those problems with the website fixed? And was it a fact that the state had not renewed the domain name?
So thank you for letting us know about the issue with the link. That I don't think that is related at all to anything else, and that's something that we'll certainly follow up on quickly. In terms of the accessibility of the website, that is something we know how important the data is, and frankly, it didn't meet our expectations or the public's for keeping that data readily accessible. It was difficult for us because we're really proud of that site. It's something that gets a lot of very positive national attention. It was a lapse in the registration, and it's something that we've already, we immediately addressed that specific issue, and we're already putting into place other steps to make sure that, as I said, that doesn't happen again, either with this domain or then the other domain, or that we don't have similar types of challenges with other aspects of how we serve the public.
Thank you. And then I would just like to follow up on Peter's question regarding the employment department budget. And you said it's what you were asking for. Can you give some perspective so for the lay Oregonian to understand how this budget might enable you to do more than you're doing now, or what the impact of this budget will be on the department operations?
Sure. The state budget works on a 2-year cycle. So when the employment department and every other agency received their budget for the 2019 through 21 budget cycle, obviously the pandemic wasn't on anybody's mind. And at that point, we were in a really strong and growing economy. So we've worked with the legislature quite a bit over the course of the pandemic to get a lot of essentially emergency permission to hire many, many more people than were originally approved for the employment department for this budget cycle. And this budget cycle going forwards carries forward the level of staffing that we'll need to get to providing all of our services to people as quickly as we want to, and then be able to maintain that. It's still a lot of work, and a lot of our budget, frankly, depends on the federal funding model. But when we're looking at what we need, this anticipates the projected workload that we'll have, both to pay people benefits and to help them get back to work and to provide research. It also importantly provides some important expansions of services. So for instance, some entities, some state agencies and local workforce boards have contracted with us to help provide services designed to get people back to work, especially people whose jobs were impacted by trade. It provides us with additional resources to help those people get new careers where they might need to gain training to really get into a long-term sustainable career if their old one has been impacted by offshore's trade issues. And then there's also additional staff and budget and resources that we need to do our unemployment insurance work with the modernization and the paid family and medical leave insurance program building and start to administer that program. So there really are those additional resources that are targeted for all that work. And then over the course of this coming 2-year cycle, we expect the economy to be improving. So we'll be adding some permanent positions for the new paid family medical leave insurance program, but we'll also be kind of scaling down over time as the need for our services eases.
Thank you.
So next up is Keaton Thomas with KATU. And Keaton, before you begin, you're in here twice. So I'll give you that heads up.
Yeah, that's a secondary computer used to record this. So sorry about that. I guess I'm curious, and I'm going to apologize in advance to Tom Cusack because I posted this to his blog the other day. But it was in reference to some of the states' report on overpayments and fraud to the federal government. And I guess I was just curious, David, if you can give me an idea of how the state reports overpayments to the feds.
There are a number of reports that all states have to give to the federal government about overpayments. And those are some very structured reports where the federal government requires us to report certain things. If I'm not sure if your question is more about the reporting or about the underlying issues, we know there's a lot of attention to overpayments and specifically to people trying to commit fraud against the unemployment insurance system. And that's certainly something that is a high priority for us and that we're paying a lot of attention to.
Yeah, I guess it's just specifically like, is that full accounting of unemployment fraud in the state, or are there certain things or situations that aren't reported? I guess I'm just asking, like, yeah, how complete is it? Well, I know that's a very vague question, and I apologize.
Yeah, the reports are complete, but there are some very, very technical definitions as to what's included. And that's something that there are some US Department of Labor, there's an entire handbook that talks essentially about how to report things. So pretty much anything involving overpayments or fraud does ultimately get reported to the federal government. It's one of the things that they watch. So it is complete data, but it's not like there's one number that you can look at to get kind of a comprehensive overall picture of what's going on in a particular state.
Okay, thank you.
Okay, so next up is Tom Cusack with the Oregon Housing Blog.
Hey, David, this is Tom. Can you hear me?
I can, go ahead.
So I wanted to follow up on that. I looked at these reports that are filed with the Department of Labor. These reports are the 227 report and the 902P report. And on those reports for 2020, just for the pandemic programs, PUA, PUC, and FPUC, they reported a total of $1.5 million in fraudulent payments, and then showed a recovery amount of $53,000. And so what I'm understanding you to say is that information is accurate, within the definitions that are required by Department of Labor. Is that accurate?
Those are accurate. Probably the most helpful context I can give for understanding what that represents. There's a couple of things that are important to realize. One is that there's kind of a natural timing to when we discover this. Obviously, we catch a lot of fraud before any payments go out, and we prevent a lot of overpayments from ever happening to begin with. Those don't show up on any reports because we caught them immediately. So what's left are the situations where we discover it after a payment has been made, that it was a payment that shouldn't have. So there's always some amount of time lag. It could be very short. Maybe we'll get new information or we realize that there was an error on the part of us or the person seeking benefits the next week, and it's a very short time lag. Other times, particularly if it's something that involves a complex investigation, maybe working with law enforcement officials, it can take a lot longer. And what's captured on those reports are when we've issued our formal decision to someone saying this was fraud, kind of officially telling them and giving them a chance to appeal that decision if they disagree with it. So particularly when we're in a recession, there's kind of a natural flow where we see a huge increase in the number of applications, a big increase in the amount of benefits that are paid out. And then over time, we're able to identify more of the payments that get reported as overpayments, whether due to fraud or otherwise. But there is some time lag there, and particularly when we're dealing with some of the big complex fraud schemes that can take longer to look at, there's that longer time lag. So I don't want to give the impression that the numbers that you were quoting are the full amount of federal benefits that were overpaid in 2020. Those are the ones where in 2020 decisions were issued telling people that that dollar amount of benefits had been overpaid.
So to follow up on that, I kind of understand what you're saying about the timing. Is there some future event or some specific timing that you have in mind in which you would anticipate that you'll try to provide a more comprehensive explanation of exactly how much fraud was uncovered or how much fraud was prevented at some future date? Or is that just something that's, wide open, that at some point we may eventually discover what that was?
So I do not have a definite date, but it is something that we intend to share. And really what we're looking at, I think I've talked before about how we really do want to be transparent and share as much information as possible. The places where we feel that we have an obligation not to do that is either where there are confidentiality issues or where, as here, sharing information can really put public money at risk, that trust fund at risk. So we do want to share that information as more time goes on and as more of the fraud rings that are attacking unemployment insurance systems nationally are addressed. We think that we'll be able to share more detail. So I don't have a definite date, and I don't think it will be within the next few weeks, for instance, but I think as the fraud situation gets more under control, we do want to share that information about amounts that were paid out, and importantly, some of the types of things that we've seen, both to help inform policymakers and to help businesses and workers protect themselves when these ongoing criminal activities may try to resurface.
Okay, thanks.
Next up is Kate Davidson with OPB.
Hi. I wanted to get back to something you mentioned in your opening remarks, Director Gerstenfeld. So am I understanding correctly that starting September 5th, basically the whole unemployment sort of system structure goes back to normal? So none of the temporary rules would be in effect. I'm wondering about things like if people are quarantined because of COVID, or a daycare classroom closes, which would still be conceivable, or a school classroom, those things will no longer be sort of exceptions within the framework.
So we are planning to go largely back to the normal unemployment eligibility rules on September 5th. So a lot of the special temporary provisions that have been placed, or the waiver of normal provisions, will no longer be there. That being said, a lot of the circumstances that came up during the pandemic, some of those people can still get benefits even when those special provisions expire. Not all of them, because frankly, the unemployment insurance system was pushed to help people in ways that it normally doesn't, in ways that it isn't normally designed to do, because of the urgent need during the pandemic. So there was kind of an expansion of that safety net, and it will go back to kind of its normal ongoing state of how it provides help for out of work workers. Some of the common scenarios that we're talking about and that we're hearing from people, for instance, somebody who can do some types of work, but maybe their particular former job they can't do because they're immunocompromised, and their healthcare provider tells them that going back to that work environment would pose too great of a risk. if they're able to do other types of work, then they may still be eligible for benefits. So a lot of the situations that came up in the context of the pandemic do get addressed under the regular eligibility rules, and not in every circumstance, but in many of those circumstances, people can still receive benefits.
I'm sorry, go ahead.
I was just going to say, I think the big difference will be that we're shifting back towards people needing to be out there actively looking for work, and the kind of broad brush across the board exceptions of normally you're required, it's essentially a safety net for when you would be at work if somebody would offer you a job. But for the economy or whatever the circumstances are, you're not being offered the job. So those normal requirements, and it's something that is set out in federal law, is that people have to be able to work, they have to be available for work, and they have to be actively seeking work. And certainly there's some room for states to interpret that differently, but fundamentally somebody has to meet those requirements in order to be able to get the unemployment benefits.
And that specific example of, say, being quarantined because of exposure or possible exposure to COVID-19, I guess this is a two-part question. Would that be covered under the old framework? Would someone be sort of exempted from that able to work category? And forgive me, because I wasn't on the call last week. Is this September 5th date? Is this the first time that the agency is saying after September 5th, this is when the framework goes back?
We've been talking about that. I can't recall if it's the first time I've said it during a media briefing or not. I think we've shared that date previously.
Okay.
In terms of the able to work question that you had, we do have to look at each situation on a case-by-case basis, because it really depends on the circumstances. That's one of the challenges that we've seen during the pandemic, is the unemployment system is a pretty broad safety net. And if you think of all the different types of jobs that are out there and workplaces and circumstances that people are in, there's a huge variety. So I'll try to give a couple of examples. If the type of work that I do requires me to be out of the house, so maybe I'm a long haul truck driver and there is no way for me to do any type of work while quarantined, then unfortunately under the normal eligibility rules, I would not be eligible for unemployment insurance benefits. And this frankly points to one of the underlying needs for instance, a paid family medical leave insurance program or some of the other temporary assistance programs that were created during the pandemic. For many people though, even if they're quarantined, they may be able to do their work from home. We've certainly seen a lot more of that as there is so much more remote working. So it's, I think one of the types of jobs that is pretty common, maybe I'm a medical transcriptionist and I can still work, and working from home isn't really going to restrict my opportunity to find work, then that person likely is still eligible for benefits. But we really have to look at what that person's restrictions are and what type of work they normally do and what impact their situation has on whether they can actually perform their job and how likely they are to be able to work if they get offered a job.